At the CME, we want to bring in our market panel now, Scott Schermerhorn and Lee Munson. Lee, let me go to you first about the news inside the Beltway, because you look at what the market is, it's shrugging off all that bad. Sometimes what happens in the Beltway does affect the markets. When there was a possibility of a government shutdown, it affected the markets, the debt ceiling. But this time, no. It seems like the market has had it with D.C.
Well, I mean, Dave, fool me once, shame on you, but fool me twice. The American public right now is very well aware. A lot of people got swindled out of staying invested through December and January by falling into this lie about the fiscal cliff that the world was going to blow up. So now that we have this new deadline, I think people are starting to think, wait a minute, the real enemy here are entitlement programs that are going out years from now, not something that's right in front of us. So most investors, if you poll them, you ask their Main Street USA, they don't really see that there's this impending doom for the sequestration that we need to start selling stock. In fact, what I hear a lot of investors ask me is, do you think we can get a little dip so that I can get some cash to work? Right.
Well, Scott, do you think that even though the president recently has kind of pulled back on some of the scare talk that he was using earlier, he's a little milder in that, but does the market feel, as most people do, that the president was overstating his case of the effect of these cuts on the overall economy?
I think to Lee's point, I think what investors have realized, this is, for lack of a better term, political theater. Yes, the president wasn't that dramatic, but I thought I heard it will cost 800,000 jobs. So there is a little bit of drama going on. And the other thing I'd say, $85 billion, which is what the cuts are, relative to federal government spending is not that much. I believe they get $85 billion out of federal spending without reducing much of anything. Just get rid of some of the fat.
Politics are based on threats and promises, and the markets are based on the bottom line. And Mike Gurker, the fact is that the bottom line of a lot of these companies is doing pretty well right now.
Which is why I will not be surprised to see the S&P trade up towards and through 1562. And then maybe even through those levels. But again, I think astute investors that have been long this market for quite a while are looking for that last push to take some profits and then wait on the sidelines for a little bit longer. But again, this market is not going to be stopped in the near term. Sure as heck not out of what's coming out of Washington. They need more concrete scenarios, much like Europe, crude oil, and even precious metals.
Liz, were you hearing anything on the NYSE today about what was going on in Washington? I mean, the political channels were all full with that information, but I didn't hear traders or investors talking much about D.C.
Well, I'll tell you something. A couple of screens are on the news channels, Fox and CNN, and they were watching earlier in the day. Not now, David. They're not really that interested. I think they all decided around here on this floor, and a lot of them have started to clear out. I talked to John Corpina, Ben Willis, Kenny Polcari. They're all saying that, in essence, they are not really looking at what happened with the sequester. It just wasn't an issue.
So, Lee, if things are looking pretty good in terms of American businesses, why are you going overseas? Your picks involve emerging markets and Vanguard International. Why not keep the money here?
Oh, I know. What is Warren Buffett thinking about me right now? Nothing, of course. But, first of all, let's just give some context. Dave, the largest, by 2 times the largest amount of money that I have in any position in any of my equity models is the S&P 500. But if you want to know where investor today who's worried about the run-up could put some capital, I like emerging markets because I always have a small amount of it. But, they didn't have the run-up over the past month or two that the S&P does. And I expect that they will outperform today, Dave, until the end of the year. But you know what? If you've been long the S&P, you got to stay long the S&P. Right. And when we get to that all-time high that's going to happen, we just have to remember, is Europe still there? Is Japan still following through? And then maybe you adjust down a little bit or keep it rolling.
Guys, we got to run, but I have to ask Scott about Apple because that's one of his picks. Is Apple going to pick up today? It's 52-week low, Scott.
I fully understand that, but at the end of the day, we've got a relatively simple thesis with Apple, and that is so long as they can make devices that make people's lives easier and better than their competitors, they'll continue to win. And quite frankly, even though we own Microsoft, we did buy a Microsoft slate. And you know something, I hate to say it, no one in our office knows how to use it. And we've got some pretty savvy technology people. But Apple continues to make people's lives easier, and I expect them to continue to do so.
And they have great customer service. I got to throw that in. Scott Schermerhorn, Lee Munson, Mike Gurker. Thank you, gentlemen. Good to see you all. I appreciate it. Liz will be coming back. Coming up,